Hey guys, and welcome back to a new accumulation zone video. In today's video I will be showcasing a new free accumulation zone indicator. I've been coding it for a while and now I'm finally satisfied with the results. So I'd say let's check it out. The whole assumption of why I created this indicator is that if we want to, let's say, assume that algorithmic bots are trading those markets, they need a y variable, so they have to know the height at what price level we're sitting at, and I have to know the time variable. This is here x, and this equals the time, and y for the height equals price. So if we keep this in mind, and now we turn on the indicator. Let's make it quick and simple. We turn on the bank secrets indicator. So let's start it. What are the basics of this indicator? The basics of this indicator is that from a orange line to the next orange line, it's always a 100 pip range. So we see price dropped from 141 with a 000. So if we really zoom in onto this level and try to get it right, 142. It dropped from 142 with a 000 right here to the 141 000 level, and those are really important levels. So basically, if algos are automatically trading this without human interference, you have to know the height of where we're currently sitting at. Otherwise, this whole chart graphic wouldn't make any sense at all. So you would have the timing right, perhaps, or like the x variable. Okay, what date is it? What time of the day is it? Is London opening up right now? Are we at 8:30 New York local time? But we don't know where we are in a height perspective. So we don't know if we're somewhere here, or we can't really put it in relation to some older price level. So for example, if we would look back at the previous high of the day on the New York session, for example, a algorithm wouldn't know what price level, what level or height level it's sitting at without using grid lines or horizontal grid lines with important numbers like triple zeros. So that's the importance of those orange lines. If we go from orange line to that small little gray dotted line, it's a 25 pip range. And if we go from the orange line to the next white line, that's also a strict line, we have a 50 pip range. So basically what we created here, if we zoom out a little bit and get rid of price action right now, we see that we created 25 pip boxes. So it's great for scalping. For example, if you're on a 1 minute time frame and you enter around a 000 level, for example at 143, and you just want to scalp 25 pips, here's your target. And you can roughly estimate now, okay, this is a 100 pip drop. From here to here, it's a 50 pip drop. You can simply add up all these 25 pip boxes. So we basically have our 25 pip box. We have our 50 pip box. Let's make this in a different color. We have our 50 pip box here in orange. And we have our 100 pip box. Let's make this not in orange. Let's make this actually in white. Makes a little bit more sense. So we have our 25 pip box, our 50 pip box, and our 100 pip box. So every time you're now looking at the charts, you can actually use price because be honest, if we're looking, for example, at a basic USD JPY chart, we wouldn't really be considering, okay, at what price level are we sitting at? Are we currently consolidating within a 25 pip box at a peak above a round level? It's gonna make more sense as soon as I'm going to present you this example. Let's continue. So let's actually turn our price chart back on. And what do we see here? This formed on the 21st of November. So if we were to turn on the Session Pro, we now have time and price in one relation. So let's look at this Monday. At the beginning of Monday, we shot up, let's say price open up here, 25 pips, 50 pips, 75 pips, 100 pips, 125 pips, 150 pips. Basically from a white line to a orange line, that's 50 pip range, and from a orange line to the next orange line already prior to opening up at the New York kill zone, basically, we already moved by 150 pips. It's interesting to know without having to measure it all the times, because now we see price through those horizontal grid lines at a way better, from a way better perspective. So now what do we see? We saw that we formed a left shoulder, head, and right shoulder pattern. And where did our left and right shoulder occur? Below the 142,000 level. Where did we trap the volume long to form this head of our head and shoulder pattern? Between the 100 pip point here at 142,000 to the 142,250 level here on USD JPY. So within a 250 pip box, they basically trapped all those traders into a long position right above here. Some of the smart traders that went short here were in profit, yeah. But the importance is how they trapped it. See how perfectly it matches up with a 25 pip box. And here, those head and shoulder patterns right here, right at the 142 round level. If you wouldn't know that if there's a 142 level, you would just be looking at, okay, here we have the London session high. It would still be working, don't get me wrong, but now you would have more confidence. It would be easier to look at your chart. You could very quickly identify that, for example, this London range here during the London kill zone moved from 25 pips, 50 pips, 75 pips, down 75 pips drop during London, a roughly 25 pip or 50 pip consolidation right here during New York, a almost again 50 pip expansion from right here, the low at 7 p.m. New York local time, all the way back up to the 50 level, still consolidating during London, peaking little bits above that 50 level, reversing, retesting this 50 level, and dropping by 50, 100, 150, 200 pips on Wednesday, on a single day. And now you can simply say, okay, we had a 000 level, or we are breaking through massively through a 000 level after a long consolidation within what? A 50 pip box. That's our 50 pip box. From a orange line to a white line, it's always 50 pips in between. So we consolidated for almost one whole day, a whole period of 24 hours, we consolidated within this 50 pip range. And now we broke through this 000 level at 141 with some real power. Not like here where we broke out of it and the next candle already got us back into our 50 pip range, and if we wait another 15-minute candle, we are way back in there already. We want to see a clear drop. And then we can be certain, okay, this thing could actually run to the next 100 pip level. And what do we get? So right here, let's say we would have entered 15 minutes, 30 minutes, 45 minutes, 100 pip drop. I leave it up to you if you want to use this indicator. It really helps me for my trading, especially in combination with another free accumulation zone indicator, which would be the Session Pro indicator. Very helpful tools, because now we can actually look at price in a totally new way, from a totally new perspective. We have our horizontal grid lines based on institutional levels, and we have our kill zone set around equity market opens at 3 a.m. New York local time for the London Open, at 9:30 a.m. New York local time for the New York kill zone opening, and at 9 or 8:30 p.m. New York local time, I think, for the Asian kill zone. I don't really trade the Asian kill zone, that's why I don't know this exact value when the Asian stock exchange is opening up. But yeah, that's what we got here. Let me get down to the settings here a little bit. So we have the full levels, the half levels, and the quarter levels. For example, if you only want to see 100 pip ranges, you can turn off both of those settings. And now you only see the 100 pip boxes, basically, that we're moving through all the time. So here we started to accumulate again, and now we're breaking above this 100 pip box. And basically how you use all those settings, it's all explained in those little information buttons right next to it. So let's actually hover over one of them. So for Japanese yen pair, so if Japanese yen is right here, so it's USD JPY, for all Japanese yen pairs, we are opening up the Session Pro indicator. Let's say, for example, we're switching over to GBP JPY. Now the bank secret indicator does not show the levels, so what do? We look for the closest 000 level, 168.000. We go to our indicator and we type in 168. And now we see our 100 pip boxes again. Very easy. Look, you see how accurate it is? It's shocking. So let's continue. 168 is our base level, and then we go in steps. Our full levels are 100 pips away. So here, if you hover over the information button, for yen pairs and oil, you always use the setting of 1 inside this window. If we're, for example, switching over to USD pairs, so let's, for example, switch over here for a Euro USD pair. Instead of using the value of 1, we would hover over this information button and we would use 0.01. I know you have to do it manually, but trust me, I tried it for multiple weeks to fully automate it and basically write an algorithm that automatically puts the right values into it, but I couldn't figure it out. And I don't think that too many people are going to be using this indicator, but the ones that do, they're gonna love this indicator because it's really good. So we're gonna use this setting of 0.01 on USD pairs. Here we're gonna use the setting of 0.005. And if we hover over this information button for USD pairs, we're gonna use 0.0025. Because the values here along the side, they're way smaller, and also the increments are way smaller compared to all those yen pairs here. So let's click on OK, and now we have to find our closest 000 level, which would be 1.04 000. So we would type in 1.04. Click on OK, and now we have our 100 pip boxes right in here again. And if we turn on our 50 pip boxes now, we now got our 50 pip boxes separators or horizontal lines. And if we turn on our 25 pip boxes, the quarter levels again, we have our beautiful grid where we consolidated. Now we're breaking down, we pull it back into our original box, zack. Very beautiful to see. Now you can actually get to know how big, for example, the movement was during the New York kill zone, or maybe from the London session low all the way up to the New York kill zone high right here, where we had a 25, 50, 75 pip range. Very simple. What did we do during the London kill zone? We dropped by 50 pips. Very easy for you to analyze now. Maybe the market already rallied up 50, 100, 150 pips within one day. Is it likely to continue with a rally after it basically just went to the upside by 150 pips? Now you can look at it in a very easy manner. 50 pips, 100 pips, 150 pips very quickly without having to pull out your measuring tool and measure it. And then you have to remind yourself, okay, it moved by 150 pips. Like this, you can actually visualize it, and you always keep institutional or bank institutional levels in check. Very important in my opinion. And yeah, I think that's it for this video. I'm gonna show a quick crypto example how you would do it here. So basically what we have here now, let's turn off the Session Pro because the settings don't match up here with Bybit. I would have to switch over to 8cap. So on the bank secrets indicator, again, what are we going to do? We use the closest 000 level. That would be 16,500. 16,500. On the full levels, we hover over the information button, and here for Bitcoin, Ethereum, it's going to show us 100. So we're going to type in 100 here. For Bitcoin, Ethereum here, it's 50, so it's half of your full level, obviously, and it's a quarter of your full level, which is 25 right here. Zack. And here we go. Now we have our 100 pip or $100 ranges basically here on Bitcoin USDT. our $25 ranges. I'm not sure if it's really so super useful on cryptocurrency pairs, but I'm 100% certain that it works on oil, all the US indices, on gold, on all the major Forex pairs, because that's heavily traded by big banks and institutions. Okay guys, I hope you liked this video of me explaining a little bit how the bank secrets indicator, a new free accumulation zone indicator, works. If you still have some questions, make sure to join us on Discord or Telegram, and you can just write into the off-topic chat or the question chat, and I will be there, or maybe other community members will be there to answer all of your questions. Alright guys, take care, and I will see you in the next accumulation zone video.